Hello super traders and welcome back to Super Trader TV New York pre-market session. Right now we're 6 minutes before the New York session is going to start and we have a special guest with us today, Andrew Lang from Acuity Trading. Okay, we just said it. Hi Andrew, how are you?
Hello, yes, I'm very good coming in from Barcelona. It's all good here. There's some interesting things happening in the market at the moment. How are you guys?
We are great, and you're right. We have very interesting issues going in the market right now, and especially the NFP and the fear factor and the euro that is dropping to 11 years low. Very, very interesting. And I saw some very interesting information in your platform, and I will be more than happy to see what you have to present to us today.
Okay, yeah, great. Let me start then. So I'm going to start with sharing a quick screen, and I'll come back to you. I don't know if I always like to start the day by reading the news. And
Me too.
As I said to you earlier, the euro seems to be going lower and lower and lower. And there's lots happening in the news at the moment, and especially around non-farm payroll. Indexes have fallen off yesterday at the end of the trading session in the US. So it's quite hard really at the moment to really judge where the market is moving. So it's a great time for sentiment.
It's absolutely right. We just mentioned it in our top 5 trading tips today. It is very hard to forecast the market. Absolutely, we are in line.
But if we can see I would like to ask the two of you as the experts, if we're looking at the European market that presents negative prints and we can see that the euro continue to depreciate, I mean, why you're saying that the market is hard to predict right now?
Andrew, please.
Well, that's a good question, actually. I mean, quantitative easing in Europe makes it very difficult. It's putting out a lot of negative news. And I'm going to show you something in a second about that. But we've got non-farm payroll, US raising interest rates, UK house figures came out today. As always, there's a plethora of information coming out, and then you've got 26 million sources out there on the internet, all telling you different things. So let's have a look at what is actually being said.
Okay.
Right.
It's very interesting.
It is.
I'm very interesting to see because
it's not only news; it's like how the news are being written or understood.
Okay, so the first screen I've got, I'm going to take you through what we've been noticing on non-farm payroll, and then I'll take you into the euro dollar and how that's performing at the moment. But guys, I don't know if you noticed, obviously the US economy has been performing really well this year and getting better and better and stronger. But here at Acuity, we also measure economic indicators, not where we try and predict where economic indicators will be coming out. But what we're just trying to do is to understand how people feel before the actual event. So we're looking at non-farm payroll here, the last year of data of sentiment towards non-farm payroll and how people are feeling. And guys, can you notice anything on this chart that's of interest?
It looks like there's such a high volatility.
We see a huge pickup.
Yes.
That's right. It seems for some reason that, I mean, I was reading the paper this morning and people were really quite ambivalent. There wasn't much happening. And now they suddenly got really, really positive. So it's really interesting. So people are obviously really positive towards job figures. And I'm going to take you across to another thing that I noticed today. I'll share again now with you. And this time we are going to be looking at the fear index. Now, guys, have I mentioned fear to you before?
Sorry?
This is the first time you are mentioning fear, but basically we are also tracing the fear factor, and it's very interesting to see how you interpret or what is your reading about the current fear in the market?
Well, what I've seen over the last year is that fear, and this is a measure of extreme words towards non-farm payroll, and we're really digging down deep into this non-farm payroll. It's really, really got less and less and less. But today, we're seeing a big spike in fear, and it's not necessarily people are fearful of non-farm payroll, but they're nervous. which nervousness is a sign of volatility. So we could see a lot of volatility compared to last month moving into non-farm payroll. And to demonstrate that, I'm just going to do a moving average of fear over the last year. And what we see is that fear is slowly but surely over the last 12 months been falling. And we're seeing a slight uptick in fear now.
And I think it's just the beginning. What do you say?
Yeah, I mean, we've got another day yet before the figures come out. So we'll be watching that closely, and that could pick up. People are nervous. You've got interest rates coming up this year. There's a lot happening.
Yes.
But as I said, news analytics is the best way of cutting through all that news and understanding what everyone is saying.
I can tell you, we have another information from the market. A U.S. investor has pulled $17 billion from equity-based ETF during 2015 and shifting the money to bonds. So we have a clear money flow right now from stocks to bond, and that's the biggest diversion in quarterly data during going back to 2000. And we know what happened in 2000.
Is that a sign? Do you feel that the end of the bull market is coming to us, Yaron?
I know that economists and analysts are speaking about the fact that we are in the mid range of the long term or the broader bull market, but I feel like, and I'm talking about in fact I'm talking about it in the last couple of months, and I'm predicting that the US market will have a free fall at least between 5 to 10% for sure in the second quarter of 2015, and that's why I'm going to take a put position or short position against the US main indexes in the upcoming months, or at least at the end of this month, and I'm anticipating that the US market will drop. We saw the PCE print come in 0.1, which is way below the inflation expectations of the Fed, which is standing on 2%. And I'm predicting that the next GDP print is going to be way below 2%. So, and combining those data together with relatively weak prints by the corporates or weak earnings by the corporates, altogether, I think that the US market should fall in the upcoming weeks.
Well, it's interesting you say that. I was going to bring this up at the end of our chat, but the S&P 500 sentiment has really been falling off in the last week. And you can see on my screen now, the 7-day moving average of sentiment, we've been really moving lower. So we're going to see some further falls in price, I think.
Let's explain to our viewers exactly, Andrew, what are we seeing? Looking at each chart, what it presents.
So we haven't released this index yet. That it's a look at the positivity and negativity combined for the S&P 500 as an index. And that's in blue. And then in pink, what we have is just the moving average to smooth out. Sentiment is very volatile, so we try always to smooth out the highs and lows of sentiment. And what we see is that we've got a sharp fall off in the last few days in sentiment towards the S&P 500. And sorry, one other thing actually I just noticed myself is the signal line of our MACD strategy is also moving much lower.
Wow, much lower, and it's the lowest level since when is the first date?
I mean, this is a 30-day, so at least a month and probably further back.
Impressive. Okay, so I'm assuming that the negative prints in the US have an influence on the US benchmark.
Of course, but we are consolidating around 2,100 right now.
Yes.
We forecasted the or in August we said that the US market will cross 2,000, and then we forecasted that the S&P 500 will cross 2,100, and we were extremely bullish on the US market until the beginning of February or mid-February. And that was the point where we, when we turned from bullish bias to neutral bias, and now we are still neutral, and I think that we may see another upside movement. We may see another upside movement by the US main indexes, of course, only if the NFP will come in better than expected. But we saw that the ADP non-farm employment change came in worse than expected, and this is the first cue for a bit negative print by the NFP. I don't know. I don't want to forecast the next NFP. I just want to tell you that we may see another shift to the upside before the free fall, and we are going to see a massive free fall. The bears are not in the market yet, but we start. The bears will start to join the market very soon, and I have to be a part of this bloodbath that is going to happen in the market.
I want to ask you, Yaron, when you're talking about a bearish bias, bias in the U.S. market right now, we can see that the U.S. dollar is very strong. Are you expecting both the S&P 500 and the US dollar to depreciate in the near future?
In this case, yes, because we are not seeing any interest rate hike in the future, and that's why both of them should collapse together. Usually we have the negative diversion between the dollar and the S&P 500, but I think this time we are going to see both of them falling down just like they climbed together in the recent year, or half year actually.
Anything you want to add, Andrew?
Yeah, I mean, let's have a look at the euro dollar whilst you're talking about that. I'll just bring it up. Let's just go to that now. So we can see, as you said, the S&P 500 falling, but switching over to the euro dollar, and here's a year's performance of the euro dollar. I think it's a year. Yeah, I put a year in here. And so you can see we're very much bearish daily and intraday on the euro dollar, and there's a very interesting occurrence that's just happened here. Sorry, Hila, did you have a question?
Yes, I would love to hear from you exactly what are we looking at, what is the green line every line presents, and what can we understand from the chart that we're looking at.
Okay, so we've got price in green here falling massively over the last year. And we've got our sentiment in grey here, or the 2-day average of sentiment, and the 20-day moving average of sentiment in pink. And the 20-day is a very good barometer for where the markets are moving. And as you can see visually, it's correlating nicely with price. We got a fall here. Now, there's something that's really interesting for me that's happened recently in the market, and it's what I would call a dead bounce. Now, what we can see here is a massive increase in sentiment. People got really, really positive. And you can see the euro dollar increased. The euro got stronger slightly, but not that much. And the reason for this, guys, is that a load of positive news or positive sentiment came into a very overarching negative market. The ECB mentioned that they're going to be starting to pump money into the economy. The euro was falling, everything was negative, and people got excited, but within a very bearish market. And that's what we see here, an excitement within a bearish market. Hence, the rally in the euro dollar was very brief and very small.
Very nice.
It looks
very
great.
Clear to see, yes.
And I think that I don't know whether the ECB has the money to pump in the money to pump into the market or not. I don't know. From the balance sheets, I can understand that they don't have enough money to pump in and help the economic growth. I don't know where they are going to bring the money from.
While we were talking, we had the incoming minimum bid rate from the European market. Just for you to know that the European Central Bank announced on maintaining the interest rate at 0.05%. Just for your guys' information.
Okay.
Yes, and let's continue.
You know that the depository rate is negative in Europe. It's amazing.
We are living through some interesting times in terms of economic policy. We have been for some years. I think I was reading an article that 20 central banks this year have been lowering interest rates already.
Yes, only lately we had the Australian and the Canadian central banks cutting the nation's interest rate.
And even the Chinese.
That's true, even the Chinese.
I still think the Chinese and the French are key economies to be watching here. I know everyone in Europe is focused on Greece and perhaps Spanish elections coming up in the UK elections, but we can't forget that Spain indeed, and France and Italy are just too big to say. They have big issues, and France still has big issues. In the contagion spread through there, we're in trouble.
Yes.
Okay, so what is your bottom line, Andrew? I have a bottom line.
So what is your both bottom line?
My bottom line as for now, I think that the NFP will generate huge volatility, and we saw it clearly at the beginning of the volatility, or a pickup in the volatility in Andrew charts, and I really like it, and it's in line with my expectations. We are going to see definitely high volatility measures, and we are going to see fear. But I think that in the upcoming future, in the upcoming months, or at the second quarter of 2015, the US market will fall at least 5 to 10%. I don't want to talk about much higher levels of depreciation. I will keep it in 5 to 10%. It's enough for me.
Yeah, I'm in agreement. Certainly sentiment seems to be going down. In the short-term perspective for non-farm payroll, it certainly seems there's a bounce in expectations for non-farm payroll to be doing well. And there's a little bit of fear creeping back into the market, which would mean volatility. And there's certainly a more interest in non-farm payroll. I didn't actually show you that chart, but there's certainly a lot more news being written this month than there was last month. And as for euro dollar, both my key signals are for intraday and daily are proving bearish currently. So I see the euro dollar has still some way to fall.
Yeah, I think that it's going to reach 109,700, and I'm in line with Andrew. Great. I would like to see what will happen during the next couple of days, and I would like to see Andrew's charts after the NFP next week.
Okay, so we will. Andrew, thank you very much for joining us today from Barcelona.
Thank you very much, and it's been a pleasure.
It's been a pleasure, and
as well.
See you next week.
See you next week. Bye-bye.
Bye-bye. Thank you as well for being with us. We're going to take a short break. When we'll come back, we are going to be in the next session, and of course, we're going to start to trade. Stay tuned.